Welcome to the presentation for examination answering techniques for paper 3.8, Public Sector Financial Management. To do the presentation, I'm Chao Mtali. The first item we'll look at is the competencies that are required for this course after you've completed the course. The first thing that you'll be required to explain the nature of public sector finance and taxation framework in Zambia. Secondly, you should be able to describe the sources of public revenue and key areas of public expenditure. And then you should be able to evaluate the nature of public sector budgeting and control systems. Fourthly, you should be able to evaluate the public financial management system using measurement frameworks. And then you should be able to recommend appropriate risk strategies for public sector financial management. And then finally, a candidate who completes this course is expected to evaluate public sector capital projects. So these are the competencies that are expected of a candidate after completion of this course. So the next thing that we look at is the errors that are exhibited by candidates when attempting investment appraisal questions, that is capital budgeting questions. What are the common mistakes or the common errors? So the first item is failure to identify relevant cash flows. That is the most common mistake that students make. So what is a relevant cash flow? So there are different types of relevant cash flows. We have opportunity costs. They are relevant cash flows for investment appraisal. So we also have working capital. It's a relevant cash flow for investment appraisal, and any other cash flow that will result directly from the project. In short, a cash flow that would not have occurred had the project not been undertaken. So a relevant cash flow is a cash flow that is expected to occur as a result of undertaking the project. So what are opportunity costs? These are relevant costs of investment appraisal, and they include the costs incurred from diverting resources from their existing use. Diverting resources from their existing use. For example, a factory will be used for a proposed project. That is an existing factory. The opportunity cost of that factory will be the revenue that would have been generated from the factory if it was not used for the proposed project. So if the factory was not used for the proposed project, that cost would not have been, incurred. So opportunity cost is the revenue that would have been generated if it was not used for the proposed project, if that factory was not used for the proposed project. For example, rental income foregone if the project is currently being rented out. So if the factory is being rented out, the rental income that could have been earned is foregone. Why? Because the project has taken place and the factory is no longer being rented. Therefore, we have foregone the rental income which could have been earned. Therefore, the rental income becomes a cost to us because we are no longer earning that rental income. So that is an example of an opportunity cost. Okay, another one is the one I mentioned, the working capital. So working capital is current assets minus current liabilities. Okay, debtors, creditors, that is receivables, payables, cash, inventory. That is what makes up the working capital of a business. So and the net working capital is the current assets less the current liabilities. So if there is an increase in working capital from one year to the next, that increase is called the increment. It's an incremental cash flow. It's an incremental cash flow. Therefore, if a project's working capital is expected to increase, say from 10,000 in the first year to 20,000 in the next year, that increase, which is 20,000 minus 10,000, the 10,000 increase is a relevant cash flow. So at the beginning of the project, let's say the working capital was 10,000. It means in year one, the relevant cash flow for investment appraisal will be 10,000. In year two, the relevant cash flow will be the incremental cash flow, which is 20,000 minus 10,000. So the 10,000 becomes the incremental cash flow for year two. So if the cash flow is expected to, the working capital rather, if it's expected to reduce in the third year, say to 7,000, from 20,000 to 7,000, then the working capital released, which becomes now a cash inflow because it has reduced. Because when the working capital increases, it's a cash outflow, it's an expense. But when the working capital reduces, then it's a cash inflow. It means that in this case, it has reduced to 7,000. So the reduction is 13,000. So the cash inflow to be recognized in the third year is 13,000. So that is about working capital. Then at the end of the project, the working capital is assumed to be recovered. The working capital is assumed to be recovered at the end of the year. So if the working capital increased to 30,000 for the first 3 years and it remained at that level until year 5, we can assume that 30,000 has been recovered at the end of year 5, meaning we expect that if it's the debtors, they have paid. Okay, if it's inventory, it has been sold. Okay, and so on. So we expect that that revenue has been recovered, the revenue from working capital, and therefore we should recognize a cash inflow at the end of the 5 years. The other common error in this paper is the failure to apply annuity factors correctly. The failure to apply annuity factors correctly. So what is an annuity? It is a constant stream of equal cash flows expected over a period. For example, a cash flow emanating from a project, a cash flow say of 5,000 per annum being realized as a result of investing in a particular project. So that 5,000 that is being generated is known as an annuity. So when discounting annuities, we use the cumulative discount factor, which is also known as the annuity factor. And that annuity factor should be for the number of years that the project is expected to run. So if a project, say you invested in a machine, or you want to invest in a machine and that machine is expected to last 5 years, it means you need to use the annuity factor for 5 years. Let's say the machine is expected to generate 5,000, or 5 million kwacha per annum for that period of 5 years. We need to use an annuity factor of 5 years at a given cost of capital, which will be given to you in the question. Now, what about where the annuity is not for the whole period? Let's say the cash flow starts in the second year and ends in the 5th year. So what annuity should we use? So the annuity factor to use will be as follows. First, we'll find the annuity factor at the given cost of capital for 5 years. And then we'll subtract the annuity factor for 1 year, or the discount factor for 1 year at the given cost of capital. Then the annuity factor that we'll find after subtracting is the annuity factor from year 2 to year 5, which should be used to discount the cash flows. That will be annuity factor from year 2 to year 5, because we have subtracted the annuity factor for the first year. And so the annuity factor now that we've arrived at will be the annuity factor for year 2 to year 5. So that is the annuity factor we use. And then we'll just multiply that annuity factor by the cash flow, which is, if it's 10 million per annum, then it will be that annuity factor multiplied by 10 million. And that's what will give us the present value of cash flows. That will be the present value of cash flows for that period. And then the other common mistake is calculating the payback period. Some candidates have challenges in understanding what a payback period is and how to calculate the payback period. But at this stage, I should expect that you would have already gained enough ground and confidence to be able to handle a payback period. However, it is still a common mistake in most of the exams. So I'll briefly run through it. So a payback period is the time taken to recoup or to recover the initial investment cost. If say the investment in a project is 100,000, the payback period will be the time it will take for the cash inflows that are expected to be generated from that project to equal 100,000. So if the cash inflows are expected to be 20,000 per annum, it means the payback period will be 20,000 times 5 years, which is 100,000. So in short, you divide 100,000 by 20,000 and you arrive at 5 years. So that is as simple as that. However, sometimes the cash flows are not even. They are not an annuity. Therefore, you need now to subtract year by year. So if the cash flow for year 1 says 20, year 2 is 30, year 3 is 40, you need to subtract the first cash flow for year 1 from the 100,000, and then the balance of the cash flow subtract from 100,000 and so on until you arrive at the payback period. And the other common error is the accounting rate of return, where some students fail to understand that accounting rate of return may be calculated in different ways. So the first way is where the question asks you to calculate the accounting rate of return on average investment. That means the formula to use is the estimated average annual accounting profits divided by the average investment times 100. And if the question asks you to calculate the accounting rate of return on initial investment, the formula to use is the estimated average annual accounting profits divided by the initial investment, or the estimated total profits divided by the initial investment times 100. So those are the three different types of formulas that you could use depending on how the question has been phrased. The other common mistake is the failure to follow instructions. In this paper at advisory level, you are expected to be able to be very clear. For instance, when you are asked to prepare a report, you must be very, very categorical and very clear on how a report, the format of a report should be like. So most of the questions, especially in the first part, the first section, are report format questions. So as a candidate at that level, you should be very, very, very clear and confident on how a report should look like. So the first thing is for a report is that it should have a source. Okay, it should have a source, should have a title, you should have a destination, who is the recipient of the report, okay, an introductory paragraph, the body, and the conclusion. And of course, there should be a date. Okay, so that is how a report is prepared. So don't forget those main things and never make a mistake of ignoring the report format because you're expected to give advice. You're expected to give advice, and usually you find you will be maybe the finance manager and you're expected to prepare a report to the board of directors. And so it is very common, especially in the first question, that you'll be asked to prepare a report. So if you forget that will be a gross error on your part. And then the other mistake is including the computations in the report. The computations should be an appendix to the report. Do not include the computations in the report, rather attach them. So for instance, you would say, I've prepared a report on the proposed project X, and my conclusion is that the project should be undertaken, and the NPV of the project is maybe 2 million kwacha. Then you say see appendix. So meaning the person now will go to the appendix to read, and then you continue now explaining other issues, other theoretical issues, but the appendix will be where now your computations are. So the format of the report, the presentation should be professional in order for you to gain good marks. Then the other issue that we look at is the common errors exhibited by candidates when attempting theory questions. So one of them is not referring to the scenario. Some candidates do not refer to the scenario when attempting scenario-based questions. This causes them to lose some marks as the scenario is provided so that the candidate can apply their knowledge to real-life situations. The scenario is intended to provide real-life situations to test the candidate's application of knowledge and understanding of the subject. So they want you to apply your knowledge to the subject. They want you to apply your knowledge to a real-life situation rather than just reproducing the knowledge that you have without applying it to solve a problem. So the whole idea is that there is a problem presented to you and you are asked to solve it. So you apply the knowledge you've studied to that scenario. So they are testing that ability. Do you have that ability? And the other common error in theory questions is the failure to follow instructions given in the question. At this level of your studies, instructions are very, very important. So what causes candidates fail to follow instructions is maybe being in a hurry. Instead of reading the question thoroughly, they are in a hurry. They start writing a question. They start answering a question before reading through thoroughly. Reading through, especially case study questions. Question 1, you have to read through once, twice, or thrice because they are normally involving. This will give you a clear picture of what the examiner is asking from you, what the examiner wants. So it is very, very important to follow instructions given in the question. If the instruction is to prepare a report, prepare the report. If the instruction is to present a table, then present the table. If they say, can you give examples? Then give examples, because some questions will say give examples. If you forget to give examples, then you lose marks for the examples because there will be marks allocated for the explanation. There will be marks allocated for examples. Then now we'll look at the techniques. Examination answering techniques. Examination answering techniques. So there are a number of techniques. Examination answering techniques. One of them is what? The handwriting. Handwriting is very, very important. If you have a poor handwriting, which is very common even at this level, you will find that you might disadvantage yourself because you are writing good stuff, but it's not readable. The examiner is not able to read. And so how can he mark things that he cannot read? You see, so it's very important. He can mark, but he might miss out some points. He might miss out some important points that you brought out, which could have earned you more marks. So ensure that you are not disadvantaged by a poor handwriting. Work on your handwriting to ensure that all the marks that are due to you are given to you. The other technique is spotting questions. This is a gross error committed by some candidates when preparing for exams. They try to predict questions that are likely to be examined in the next exam. They like to predict questions that are likely to be examined. Okay, the exam covers the entire syllabus. It will therefore include questions or parts of questions from each syllabus unit. Therefore, instead of spotting questions, you should spot units. Instead of spotting questions, you should spot units. That is, if it's necessary. Otherwise, avoid predicting questions, because the exam covers the entire syllabus. Then question selection is another issue when it comes to examination answering techniques. Some candidates start with the most difficult questions. This makes them waste a lot of time on one question. Such candidates will start panicking because they realize there is little time left to attempt the other questions. Okay, so be very, very careful when it comes to question selection. Ensure that you start with the question that is you are most comfortable with. If section A is a bit difficult for you, you can start with section B of the paper. Okay, take a few minutes to read through before starting to write the exam. Okay, this will enable you to select the easiest question to attempt first. Then the other common technique is failing to allocate time for each question. Failing to allocate time for each question. Some questions deserve more time than others. Some questions require less time than others. Therefore, select your questions wisely. Okay? In section B of the exam, that's where you have what? Optional questions, where you are required to attempt any 3 out of 4 questions. Always allocate your time to each question based on the number of marks it is worth. Always allocate time to each question based on the number of marks it is worth. For example, a question with 10 marks should be allocated more time than a question with 5 marks. Because if you allocate more time to less marks, a question which has less marks, then you are more likely to be unable to finish the paper. Because the marks allocated to each question, they are an indication of how much time you should spend on that question. So if you spend more time on a few marks, you are more likely to write less on the other parts which require you to write more, because they have more marks. So be careful before you start answering. Check the marks allocated. Then that will give you a guide as to how many pages, if at all, you should write number of pages. How many pages you should write of that question. Then let's look at now the meaning of some syllabus command words. Meaning of some syllabus command words. Advise. What does it mean to advise? It is to help somebody reach a decision through a mixture of facts, opinions, commands, and options. This requires you to help somebody reach a decision through a mixture of facts, opinions, commands, and options. Then to analyze is to look closely at the detail, give reasons why or how something is done. Okay? Then to calculate is to work out. That's the most obvious. To calculate is to work out. Marks are usually given for the workings. To comment is to analyze and evaluate in a balanced way. To comment is to analyze and evaluate in a balanced way. To interpret, if the question says interpret, Means you explain and comment on the subject and make a judgment. Explain and comment on the subject and make a judgment. Then to compare is to look closely at two or more things which have something in common in order to see how they are the same. So you are comparing two things or two or three things which are somewhat similar. Then now you identify the differences. You identify the differences. Then to evaluate, some questions will say evaluate. To evaluate is to make a judgment about how good, bad, or successful or unsuccessful something is. That is to evaluate, okay, against a specific criteria. It's an opinion-based response. It's an opinion-based response. So you are making a judgment and then a conclusion. Okay, you are making a judgment. For instance, in investment appraisal questions, you'll be asked to evaluate. So you evaluate the proposed project and you make a conclusion to say the project is viable, should be undertaken, or the project should not be undertaken. That is what? An evaluation, and you do your computation. So you say, based on my computations, the project should not be undertaken because the NPV is what? Negative. Or based on my evaluation, the project should be undertaken because it is resulting in a positive NPV. So that is an evaluation. That's an evaluation. Then illustration is examples. This is where you give examples, including figures or diagrams. Discussion. What is a discussion? You are examining and considering the main reason for and against to come up with a conclusion. So a discussion should not be advantages only. Let's say they say discuss the various sources of finance, or they say discuss the concept of working capital management and so on, or discuss the statement by the managing director. So when you are discussing the statement by the managing director, you look at the pros and cons, meaning advantages, disadvantages, or the good things about the statement and the things that you don't agree with. So that is a discussion. Then examination means you look closely. They say examine. You look closely at something and discuss in a balanced and detached way in order to come to a decision. So at this level, you should expect this kind of questions or this kind of command words. Then to explain is the most common in exam papers. It simply means to give reasons for how or why something happens. Give reasons for how or why something happens. Then to justify is to give a reason to support an argument. Okay? Justify is to give a reason to support an argument, to defend a point of view. So in short, they can say justify why the project was undertaken. You can give the reasons. Though the NPV was negative, the project was undertaken because there are some other non-financial factors. Other non-financial factors which were taken into account in making the decision. So you are defending the fact that, you are justifying the fact that though the NPV was negative, the project was still undertaken. Why? You give reasons to support your argument. That is justifying. Okay, let's look at some practical exam questions. This particular one is talking about a government constructing a road network. Okay, and the construction of is for a 450 kilometers a road network. Okay, and the total cost of the project has been estimated at 0.5 billion, and the government has arranged a 0.3 billion project loan agreement. So now let's look at the the question, how the question came. So the question was, the first part, assume you are the director of finance at the department, write a report to the board of directors. You see, this was a question that is what? Compulsory, question 1. Write a report to the board of directors that evaluates the proposed construction of the road network and other related factors. Your report should cover the following. Number 1, an appraisal of the proposed road construction project using the NPV method. Advise the directors whether the project is worthwhile on financial grounds. So you analyze, you look at the cash flows, the relevant cash flows that will arise, which cash flows are relevant, which ones are irrelevant. So don't include sunk costs, cash flows that have already taken place. Include only those cash flows that are expected to result from the project. And then look at the annuity, the cash flows that are expected to be an annuity that will occur, equal cash flows over a period. Then you discount them, and then you put it in, after you've done your NPV computation, then you put a report, put it in report form. Why? Instructions. You're saying write a report. So you should write a report. Okay, let me just, so you say to the board of directors, roads department, from director of finance, then the date, then subject, then introduction. This report provides a financial evaluation of the proposed network, and then network, and discusses related factors. Then you say part A, investment appraisal. Then you write, the results of my computation, C appendix, show that based on financial grounds, the project should not be undertaken as the NPV is negative. So there is an appendix attached to what? To the report. Okay, so that's that. And then you start answering the other parts of what? The question. There is part B, part C, and part D. And then you'll be done. At least you have, you get the free marks from what? The format and following instructions and so on. So thank you very much for your time. This is what I had for you today. God bless you.